A leading consumer wear player, Cello World, is set to hit the IPO market on Monday, October 30. Mumbai-based Cello World boasts an extensive product portfolio across three key categories: consumer houseware, writing instruments and stationery, and molded furniture and related products. Cello has priced its offer in the range of Rs 617 to 648 per share. At the upper price band, it looks to raise Rs 1900 crore. The IPO is entirely an offer for sale, wherein promoters will offload stake. This means that any money raised via IPO will not go to the company but to the selling shareholders. Investors can invest in a lot of 23 shares and its multiples thereof. Retail investors will need to shell out Rs 14,904 to subscribe to one lot of the IPO. About 50% of the offer is available for qualified institutional buyers, 15% for non-institutional investors, and 35% for retail investors. Now let's take a look at its financials. The revenue growth and the profit growth have been relatively stable and healthy over the last 3 years. For FY23, consolidated revenue increased 32% to Rs 1796.69 crore. Net profit meanwhile increased by 30% to Rs 285 crore. Furthermore, it had the highest ROCE amongst the peers between FY21 to 23 and highest EBITDA margin for the fiscal 2021, 2022 and 2023. In the primary market, Cello World is commanding a healthy premium of Rs 100 per share. We also connected with Shreyan Shah of Stocksbox to understand the positives and negatives of the Cello World IPO. Take a look.
Cello World has become of late a renowned brand in the retail segment. Positive part of the company is that they have 15,000 SKUs diversified across the furnishing, glassware and stationery. In the stationery segment, they are growing significantly and their EBITDA margins are very good in the stationery segment. Also in the furniture segment, they are growing in compared to their peers, and they are focusing on the market share increase as well. So that is the positive thing. Other thing is that across overall the business profile, what we feel is that their debt to equity ratios are comparatively lower. They don't require as much more funding for their capex plan and all, because they are well off with it. Their capital cycle is proper. So that is the advantage. Now coming on to the negative side, we feel that the entire proceeds of this IPO is for the selling shareholders, and that is the promoter group. So that is one of the negative side from the fundamental perspective. Other thing is that in the last 18 months, to be specific, on the 11th October, they have given additional equity shares at the rate of 275 per share. Now, what makes us wonder is that there is nothing significant growth in between 11th October 22 and at the current time zone. So what makes them do overpricing of this around 2.5 times? So that makes us negative about it. Also, the third thing is that although company is establishing its brand, but there are players both in the glassware segment as well as the stationery segment, which have more branding command compared to Cello in the premium segment as well as in the lower end. So that may be a bit of a tough to crack for the company.
But the main question is, what is the final verdict on whether you should subscribe or skip this IPO? According to Reliance Securities, investors can subscribe to the IPO. Reliance Securities says that Cello World would be a prominent player in its respective business verticals with a large addressable market growth of average 16%. Strong financials and a debt-free nature of the company offer a growth play in the long term, according to Reliance Securities. However, Shreyan Shah of Stocksbox believes it's more suited as a listing gains play for now. Here's what he said.
Looking at the market environment and looking at the valuation which Cello is asking for, we would recommend the investors to subscribe it for listing gains, and then look forward that how companies come out with the Q2 numbers and what are their commentaries, the management's commentary about the Rajasthan plant, which they are almost developing for glassware industry, in-house glassware industry, and then we'll figure it out whether to keep it for long term or not.
That's all in this video. Thanks for watching.